PPP loan fraud arrests are about to skyrocket, especially now that Donald Trump is in office. According to corporate law firm Perkins & Co., DOJ is aggressively targeting PPP loan recipients. The U.S. government has recently embarked on a quiet but active campaign against Paycheck Protection Program PPP recipients believed to have submitted inaccurate information as part of their applications. Although the government has long been prosecuting cases of large-scale outright PPP fraud, it now appears to be shifting its focus to cases involving more technical non-compliance. Essentially, what's going on is that there's a change in focus as far as the types of cases the Department of Justice is pursuing. Now, over the past couple of years, they've gone over some of the more blatant cases of PPP fraud, but now what they're shifting to is what's called technical non-compliance. The unprecedented business impact of stay-at-home orders, the desire to take advantage of the limited funds available, and conflicting early advice from the SBA and others concerning the eligibility criteria all led to an apply now, ask questions later mentality that became the norm for many. Now, what a lot of people fail to realize is that when they enter in the information electronically for their PPP or EIDL loan, that information is stored somewhere. So if you falsified information on your PPP or EIDL loan, there's no way to backtrack that. And I would bet most people who fraudulently obtained a PPP or EIDL loan don't even remember what information they put on the application. Now there is significant risk of Civil False Claims Act actions and criminal prosecutions. Now, this was a recent announcement from the U.S. Attorney's Office. This involved a local DC nonprofit organization that was ordered to pay $677,634 to resolve PPP fraud allegations. And this was less than a week ago on January 14th, 2025. So I just wanted to put this out there because a lot of people think just because their PPP loan was forgiven that they're in the clear, and that's not the case at all. What the DOJ is focusing on now is technical non-compliance. A Washington, D.C. based nonprofit organization has agreed to pay $677,000 to settle allegations that the organization violated the False Claims Act when it applied for and received $338,817. Now, real quick, as you can see, the amount that they were penalized to settle the allegations was double of what their second draw was under the PPP loan. So the organization violated the False Claims Act when it applied for and received $338,000 second draw loan under the Paycheck Protection Act program, and when it further applied for and was granted forgiveness of the entire amount of the loan. Just because the loan was forgiven does not mean that you're in the clear. You got to remember the Bank Fraud Harmonization Act of 2022 that Joe Biden put into place, which essentially gives law enforcement up to 10 years to investigate PPP and EIDL loan fraud. The CARES Act authorized billions of dollars in forgivable loans to small businesses and other entities, including nonprofit organizations struggling to pay employees and other business expenses. Under the applicable provision of the CARES Act, a business concern or entity, including a nonprofit, is not eligible to receive a second draw loan if it is primarily engaged in political or lobbying activities, which shall include any entity that is organized for research or for engaging in advocacy in areas such as public policy or political strategy. At the time it applied for a second PPP loan, a Jewish Voice for Peace certified to its lender and the SBA in the loan application that it was not a business concern or entity primarily engaged in political or lobbying activities. It further certified in the loan forgiveness application that it met conditions for receiving a second draw PPP loan. The investigation revealed that a Jewish Voice for Peace was primarily engaged in political activities. Under the False Claims Act, a party found to violate must pay 3 times the amount to the United States. Had a Jewish Voice for Peace been found liable to the United States under the False Claims Act, it would have been ordered to pay 3 times the amount and lost interest, along with civil penalties for each false certification made in the loan application and forgiveness application. This settlement today stems from a federal investigation that was initiated when another public interest group filed a whistleblower complaint. Now, here's another instance of a nonprofit organization that basically had to go through the same thing as far as paying a penalty to resolve PPP fraud allegations. Now, in this particular nonprofit, Americans for Peace Now, another Washington, D.C. based nonprofit, has agreed to pay $261,890 to settle allegations that the organization violated the False Claims Act when it applied for and received a second draw of $130,945 under the Paycheck Protection Act program. And again, this is pretty much the same sort of situation. At the time it applied for the second draw, it certified to the SBA that the loan application was not a business concern or entity primarily engaged in political lobbying activities. Now let's go over some of the key points of false claims under PPP. Now, number one, employee count manipulation. So claiming to have more employees than actually employed to qualify for a larger loan amount. And this is basically inflating your employee count. And I've talked about this in other videos, how businesses have to file what's called a 940 and a 941, usually quarterly. So that'll tell how many employees you had and what the total payroll that you had actually spent on those employees. Payroll inflation. So inflating payroll expenses by including non-qualifying payments like bonuses or owner compensation to increase loan forgiveness amount. There's also misrepresentation of business operations. Now, probably the most overused is false financial hardship claims. So exaggerating financial stress to appear more in need of a PPP loan. Now, this is kind of like saying that you were negatively impacted by COVID-19, but your business operations continue to go on despite a lot of the COVID restrictions. You also have non-qualifying expenses for forgiveness. So claiming expenses like personal expenses or non-essential business costs as eligible for loan forgiveness. There's also ownership structure deception. So failing to disclose connected business entities or ownership interests that could affect eligibility. And you also have falsified documents. So submitting forged or altered documents to support loan applications. Now, as I've been saying, just because the loans have been forgiven does not mean that you're in the clear. The new focus is on technical noncompliance, and we did go over some of the major areas where this may have occurred. And just remember the Bank Fraud Harmonization Act of 2022, which basically extends the statute of limitation for law enforcement to pursue PPP as well as EIDL loan fraud allegations. Now, any false certifications of PPP loan forgiveness eligibility may be investigated. And this could also lead to stiff penalties under the False Claims Act. Now that President Donald Trump is in office, you're more likely to see even more cases and people getting arrested, as well as other civil penalties and fines. Anyways, that's all for today's video. Let me know your comments and questions right down below. And until next time, take it easy and we'll talk to you soon. Peace.